And then we got another eventful day on Thursday, December 1st, the start of a new month. Bonds were sideways in Asia, initially weaker in Europe, then gradually stronger at the start of the domestic session. UMBS were hitting the snooze button, with buyers and sellers being more than a quarter apart in light volume. UMBS were dead flat on the open, and the 10-year was down 10 basis points very early today. Job claims came in at 225,000 versus a 235,000 estimate. It was 241,000 previously. The 4-week average is 228,000, so the job market is holding strong. Personal income rose by 0.7% on a 0.4 estimate. We've talked about this a lot, where people are making just enough money and having enough wage increases to handle the minimum monthly payment on all that credit card debt they're racking up. Headline PCE rose 0.3 in October. This is in line with estimates. The year over year is at 6%. Again, this is supposed to be down around 2. This is down from 6.3 and a 7% in June. The core PCE, which is the Fed favorite, was up 0.2% versus a 0.3 estimate. It was 0.5 last time, so maybe some of the changes are starting to take effect. Core PCE prices year over year were up 5%, and spending rose 0.5%. Apartment List reported that rents fell by 1% in November, third decline in a row, though it could be seasonality. Year-over-year increases have moderated to 4.7%, and the vacancy rate has gone from 4.7 to 5.7, which is up, but still historically low. In his speech yesterday, Jerome Powell signaled that the Fed would be ready to begin slowing the pace of rate hikes as of December. This was taken as a blaring signal that the Fed is going to do a 50 basis point hike in December instead of 75%, although the Fed fund futures are still handicapping a 20% chance of a 75% hike. We get the BLS jobs tomorrow, expecting 200,000 jobs and a 3.7% employment rate. It all seems like people were processing the comments from Powell to indicate that they now know what the track is for the Fed coming up. Odds are it'll be 50 basis points in December, and then two hikes of 25 basis points beginning of next year, ending us out around 5.25. At the end of the day, we were up 30 basis points on the day, so it was quite a rally, coming 44 basis points from the low, which puts us firmly in this big wide range with a 102.788 as the ceiling and 101.035 as the floor. These wide ranges can be bouncy, so we'll have to see how the reaction comes for the jobs report tomorrow. We also got the FHA lending limits update. In low-cost areas, they will now lend up to $472,030. The last 30 is the important one. High cost areas, they go up to $1,089,300, and then special areas like Alaska, Hawaii, Guam, and the Virgin Islands, they will now go up to $1.6 million. Ooh-wee. November 2022 also delivered some interesting data. It delivered the best 1-month excess return performance at 1.35% in the history of the US MBS index. So this is how much more money you make on MBS versus the treasuries. This performance comes in at 3.5 standard deviations above the average monthly return for the index. So we take what life gives us. The index performance was driven by longer duration component, as the 2 to 10 spread inverted another 27 basis points to 71 basis points inverted, which is a lot. It's the most since the early 1980s when we had a terrible recession. We also got a post from our sponsor at WellThatMakesSense.com. This is the power of what's focal is presumed causal phenomenon. So they talk about many instances in the past where what we're paying attention to is presumed to be the cause of something, and how you can use that to sell more. So check out our sponsor at www.WellThatMakesSense.com.